Alright guys, so in this video, I will go over the 4-hour auto block trading strategy in detail. I have uploaded a couple of videos on this topic on YouTube, but in this video, I will explain it in detail. Okay, so basically it is an auto flow trading strategy, but it is a bit unique to the normal traditional auto flow, trading strategy. Okay. So this is how we look at it. So number one thing is look at the auto flow on 4-hour time frame. Now, when you open the charts, let's say you open Euro USD, okay? You don't want to go back. What do you see at the current price, right? What are you seeing? Are you seeing price going up, creating higher highs, higher lows, higher highs? If you see like 3 higher highs like that, the trend is bullish. Okay, and if you see like a market structure shift and then a break of structure like that, then that could be your shift in the market structure or a reversal. Okay, preferably I would like to see another break of structure like that. So 3 break of one break of structure and 2 break of structures like that, and that would be my trend reversal specifically for this strategy. Okay, so now that you know that, let's say that you know that the auto flow is bullish. Okay, so in real markets, this is not going to look like this. It's not going to be that clean. It's going to look something like, something like that, and then you're going to have this, and then you're going to have something like that. Yeah, so you're going to be making you're going to see price making higher highs, higher lows, higher highs, like that. Cool. So now my point here is, the second point here is, you have to mark out every single auto block. So remember the auto block video that I taught before, auto block 2.0, right? You want to mark out every single auto block. But when you are, remember this thing, okay? For this strategy, when you are looking at the higher time frame, so we are currently looking at the higher time frame, right? So let's say that this down move is consecutive bearish candles. So 1, 2, 3 bearish candles, okay? When you're looking at the higher time frame, which is the 4-hour, you want to refine it, okay? So let's say there are 3 candles in this leg here. You want to mark out the body of the last candle here, okay? So in the auto block 2.0, remember we use the body of the candle. So you have 3 bearish candles, 1, 2, 3. That is a whole auto block, but we refine it. We are going to refine it, okay? We refine it, and this is the candle. So now what we are going to wait for is price to come back into our auto block. Once that happens, we drop down to 15-minute time frame. Okay, so you mark out OB near price action. Okay, wait for price to come back into your OB. Look for market structure shift during kill zone Rs and entry during kill zone Rs as well. Okay, so you wait for price to come back into your auto block. Okay, so once that happens, you drop down to 15 minutes time frame. You look for market structure shift during kill zone Rs. Now, when you're at 15-minute time frame, so we are only using 2 time frames for this strategy, 4-hour and 15 minutes. We're not going to use any other time frame. Okay, 4-hour and 15 minutes. So now that you have a market structure shift on 15-minute time frame, now you have to use the consecutive bearish candles as your auto block. And remember this one thing, a lot of people don't get this right. So if you have something like this, price did not take out the low here, and then you have, let's say, maybe a break of structure here. There was some structure here and price broke it. That is a low probability setup. I want my auto block to take out some sort of liquidity. So these are the consecutive bearish candles, right? If it takes out some form of liquidity, could be just be a little low here, right? It takes out, and then you have a market structure shift. Now that, guys, that is a high probability auto block. And let's say that there is a breaker block here as well, right? So, you know the definition of breaker blocks, right? The first candle of this here, and the first candle, and the first candle is like the of this leg, right? So this leg right here, the first candle of this leg and the first candle of the auto block are in alignment with each other. The size is the same here, okay? So you mark out this level right here, right? This is consecutive bearish candles on 15-minute, okay? You take your entry right there and you target 1 to 2. You go for 1 to 2 for this trading strategy, guys, okay? And you're gonna have above 58 to 60% win rate with this strategy, okay? I'm not gonna say you're gonna have like 70% or 80% win rate. You're gonna have 58 to 60% win rate. You are gonna easily pass your FTMO challenges or prop firm challenges if you follow the strategy correctly. Remember, this works with every single pair. I do not try this with indices. I would recommend you do not try this with indices. You can backtest it, but the thing is, try with Forex, okay? Every single pair here except these ones, okay? Just use these main ones. So here's the risk management for this strategy, okay? So once the price hits 1-to-1 risk to reward, let's say price hits 1-to-1 risk to reward, you move your stop loss to break even. And then you keep the trade open till 1 to 2 is hit. That way, it is like the least, you know, anxiety free, like I would say it's the anxiety free trading strategy, guys. It's quite rule based. And one more thing. So let's do this. Okay. Boom, boom, boom. So let's say the trend is bullish, right? This strategy does not require break of structure for the auto block to be valid, okay? So it does not have to break the high over here, right? And then you would consider this as your POI or auto block. No. If you know that the trend is bullish, you mark out every single bearish candle below the price action. So let's say that this is a bearish candle, right? And the bullish candle closes above it. So this is the bearish candle and this is the bullish candle, right? Even that is a valid auto block. So you wait for price to come back into this auto block. You drop down to 15-minute time frame. You look for market structure shift. It's going to happen something like that. You take your entry and boom. So let's say there was like, let's do this, something like that. Okay. This is a bearish candle, right? And after that, you have a bullish candle, and the body of the bullish candle closes above the body of the bearish candle. Wicks don't matter. So if the body closes above the bearish candle, right? Bearish candle's body, then that is a valid demand zone or an auto block. Price comes back. As long as the low, the wick is not violated. So let's say there's the wick of this auto block, right? So you keep looking for market structure shift until this level is broken or this level is violated. Once that happens, that auto block becomes invalid. However, let's say that you have an auto block here, okay? Maybe you have an auto block here. So you choose the body of the candle. Oops, my bad. You choose the body of the candle like that. Cool. And then you look for market structure shift on the smaller time frame and you take your entry. Kaboom. 1 to 2. Simple as that. I'll give you guys a couple of examples and then I'll end the video.